Hello, so we're going to finish up this anti-dilution page with the last weighted average dilution calculation, and then we'll go on to implementing it in the cap table and the liquidation model. So I zoomed out here so you can see what everything is looking like, and try to make yours, you can make it match if you want to, or you can modify as you see fit, but I just wanted to give you a view of the overall structure. We're going to be working on this one here. So let me continue to zoom in so that it's legible. And we will go from there. So, first thing we're going to do to begin doing this final set of calculations is start like we have before with the amount invested on the most recent round, which is from the cap table. $10 million right there. After that, we'll do share price, and share price in this calculation is just like in the share price above, in that we're going to have to use solver in order to find it. But we know that the calculation from the cap table is $21.10. So I'm going to put 21 here so we get something close, then we can use solver to find the exact number. So shares issued would be 10 million divided by the share price. And then pre-money valuation, that's from the cap table. And that is cap table here, which I've been playing with it, but we'll go back in and make it $40 million, just like we had, and keep moving on there. So post-money valuation, 40 million plus 10 million, and then value would be shares issued times share price. So those all look good. Let me format them. And we'll move on to the next thing. So I've copied and pasted from above the basic outline of the conversion price calculations. You can do the same thing. And the first thing we need to get are the options from Series B. So we can go in and get the Series B options from right there that we calculated in the cap table. And then we'll go up and we'll do the CP1, which CP1 is just the Series C conversion price from the previous round. So that's it right there, that 588, as you can see, Series C conversion price. A is, it's the total shares as if converted from the previous round, plus the Series B options. B is the amount invested divided by CP1. And then C is the shares issued in this round. So after we finish those, we can go on and calculate CP2. So CP2 is calculated just like from above. So what we can do is just go in here and copy that formula from up there and paste it right in here to get our correct number there. Uses all the formulas. It'll copy and paste right in. Next, we'll go down here and do Series C conversion price. Series C conversion price just references that cell right there, that's CP2. And then we'll do weighted average shares issuable for Series Seed. So the weighted average shares issuable for Series Seed works just like above. In fact, in the previous video, we did all of these calculations. I'm just showing you how to do them for 2 different classes of stock versus 3. And then we'll continue, that can continue into infinity, like I've mentioned before. So the weighted average shares issuable is way up here in the top, shares issued times share price when they were issued divided by the conversion price. Same calculation there. Obviously, that's less shares than we currently have, so we don't want to take that. However, what that does is it gives us a number to input here in number of shares owned if it's a greater number. So we'll go into series seed number of shares owned, and we'll do the if statement that's required there in order for it to function properly. So what we do, once again, is we say if the share price in the series B round is greater than the share price when they were issued, then just give us the shares that we got originally. Otherwise, give us the weighted average conversion shares. Right there. Pretty simple. Next, we'll just do value. These are all simple calculations that I think that you will know how to do by now. But if you don't, then keep watching and we'll make sure you get it. So current value minus value from the previous round, value as if converted, and this should equal the share price. It does. And then the full ratchet conversion rate is something else we're going to do again. So full ratchet conversion rate is going to be the full ratchet shares issuable for series seed divided by the original shares issued, 226,030. And of course we have a 0 there, or we have nothing there, because we haven't calculated the full ratchet shares issuable for series seed. Still not a very hard calculation. In fact, you've done it already. You did it in the full ratchet column, but we'll do it again. And so that's shares issued originally times share price originally issued at divided by share price in this round. So we have the full ratchet shares issuable for series seed. Okay, and the last thing we are going to do here for the series seed is do the weighted average conversion rate. So the weighted average conversion rate is another if statement, and we'll say if the share price in this round is less than the share price from the previous round, then give us the number of shares owned divided by the original shares owned. And that'll give us our conversion rate. Otherwise, just give us 1. So that's just making that percentage that we've talked about, and will give us the conversion rate for the preferred shares to convert into common shares in any liquidation scenario. Okay, so after that, we're going to move on to doing the founders portion of this. So the number of shares owned for the founders is total shares here plus the Series B options. And so you'll see that that number coincides directly with this A. You can just go over here and reference this A, but just for understanding, I did it the other way. Then value is that number times the share price. Value gained, once again, from the previous round is what we're going to reference, that 8.491. And then value as if converted, just to check, make sure everything's working out, $21. So that's where we go from there. The next thing we're going to do is now we're going to figure out the conversion price for the Series A. So the first thing we do there is get the Series B options. And for this, since we know them, it's just going to be the 83,652. For CP1, what we're going to do is reference the share price at which Series A was issued. So it's a little bit different from above, from the Series Seed. For A, we're going to have the same number as above, so we're just going to use that as our reference cell. And for B, B is a different number because we're dividing by a different CP1. So we have to take the amount invested in the Series B and divide it by the new CP1, or the CP1 for Series A. And then of course with C, that's going to be the same number as above. So we'll just reference that one too. And C, just if you've forgotten, is the number of shares issued in this current round. So now CP2 can be calculated just by copying and pasting this formula down here again. Get 955 is our price. and we'll move on from there to the Series A conversion price right here. So the Series A conversion price, just like the Series C conversion price, is just CP2. Then the weighted average shares issuable, that is calculated just like above, and that you take the shares issued into Series A, multiply it by the share price, divided by the Series A conversion price. It gives you the shares issuable. After that, we'll do the full ratchet shares issuable. We'll do it in order this time. And full ratchet shares issuable is just shares issued once again to the Series A times share price. And this time we don't use the conversion price, we use the actual share price for the round, for the full ratchet. And the reason that is because full ratchet it'll reduce all the shares, it won't reduce a weighted average amount of shares. So the weighted average share price, or the Series A, Series C conversion price, whichever you want to call it, takes into account the weighted average number of shares that need to be converted. So it gives you a different share price. Whereas full ratchet just does them all, so you can just take the share price in the actual round and not have to calculate a conversion price. Okay, so after that, we're going to go up to the Series A portion and do number of shares owned. So number of shares owned is an if statement. We're going to say if this price is greater than this price, then give us these shares. If not, give us the weighted average shares issuable for Series A. Oops, looks like I forgot my if statement. There we go. Next, we're going to do value. So value is number of shares, that's your price, and value gained or lost, value minus value from above. Make sure you get in the right section here. Go to the Series A section. 2.1 million. Value is if converted. 21. Okay, and then the full ratchet conversion rate, done just like below in the Series Seed. We'll take the full ratchet shares issuable and divide it by the shares issued to the Series A originally. And the weighted average conversion rate, so this is where the other if statement comes in. Say if this is less than this, so if the Series B share price is less than the Series A share price, then take the number of shares owned by Series A and divide them by the number of shares issued originally. Otherwise, just give us 1, and we have a 1 there. After that, we're going to sum up all of our shares from this round. So we can do our ownerships. Whoops. So we do founders and options, Series Seed shares, Series A shares, and Series B shares this time. 2.91 million. You know what? I put the wrong. Okay. Okay, so quick mistake. I just noticed that the founders and options number of shares owned is using the wrong cell. So I accidentally clicked the total shares as if converted from above, and instead I need to do the founders plus options shares right here, this 1.271 million. So that changes things pretty drastically. And I also mentioned above that this number should equal this A. It's not correct. So scratch that. This is the correct way to do it. The 1.355 should be the number you're looking for. So then we'll just go ahead and do market cap. So market cap is at 2.372 times 21. which gives us almost 50 million because we know this should actually be 2110, and we'll let solver show that to us. Okay, so the next thing we need to do is begin calculating percent of company owned. So that is simple, number of shares owned divided by the number of shares as if converted. And we'll do that all the way up real quick. Series A and Series B. Okay. So, and the last and final step here is using solver to calculate this share price for us. So once again, just to review solver, our objective cell is the percent of company owned for Series B. So it's a Series B round. We want to make sure and set that. The value of we need to set it to is the amount invested divided by the post-money amount. So that's 20%, 20% even. So I'll just throw out a few zeros there. And then we want to do that by changing the share price cell. So we set the parameters, or the variable cell as the share price cell. We click solve, and you see that we got $21.10 as our share price, which matches the share price from the cap table. That's because there's no dilution shares being issued or anything like that. All the shares are exactly the same. And so we know that is correct. So what if we change the pre-money valuation here? So say we change the pre-money valuation to 5 million. So our pre-money valuation is 5 million and we're investing 10 million. So let's do that math real quick. 10 million of investment into a $15 million post-money is 0.6666 into infinity. So there's our number, 0.666667, something like that. So we use solver again. We set the objective cell as a percent of company owned. We set we want that to be set to a value of 0.666667, and we want to change the variable cell equal to the share price. So we solve that. So we solve that and we get a div 0 error. And the reason that is because we were at 21 and we have to bring it way down to about $1.45. The functions in Excel, and this is not an Excel course, but just to help you troubleshoot, the iterative calculations in Excel by default are generally set to 1,000, I think, and it takes more than 1,000 iterations to get this price all the way down to where it needs to be. So instead, go ahead and manually change that share price to 1, and then run solver, and it was set to the same variables, and it should give you a correct answer of $1.45. Takes less iterations. It can actually do that within the confines of the program or the default settings of the program. So we know that it's $1.45. That's the share price that it needs to be, and we're now being issued anti-dilution shares to Series A and the Series Seed, and that really affects the ownership of the company, of the founders, because now they only own 22% of the company, of the founders and the options. In all reality, the founders are only 1 million of these 2.2 million shares, so the founders own less than 10% of the company. And that is the end of the anti-dilution calculations. Now we'll move into implementing that in the cap table and into the liquidation model.